Hi there, I'm Ben Jones and you're watching Dukascopy TV. Janet Yellen speaks today for the first time as Fed Chair. Joining me on the line to discuss her speech and what we can potentially take from it is Peter Warburton from Economic Perspectives. Peter, to begin with, if we can look at the text of Yellen's speech, she's outlined that she's expecting to see continuity when it comes to monetary policy. Can we take from this that the Fed will continue to taper at the same rate? And is this the type of stance you expected from Janet Yellen for her first speech as Fed Chair?
Yes, absolutely. Obviously, she was one of the architects of the current policy, and I think she has been viewed very much as a continuity candidate from the retiring chairman Bernanke. I think what she did was to hedge by saying that the purchases are not on a pre-set course of tapering, but rather that at every turn the Fed will consider really whether its forecasts of a strengthening outlook and the outlook for falling unemployment and other positive labour market developments are still in place. So I would definitely not rule out there being a meeting when they did not sanction a further step down in the purchases.
Now, with regards to the unemployment rate thresholds, she stated that they do not prompt a rate hike, but merely indicate that the committee should consider discussing it. What can we take from this, and what else do you think stood out from the text of the speech? Does there seem to be a focus on any particular area?
I think the downward adjustment of the unemployment threshold, I think, is very definitely under consideration, although clearly she wouldn't give anything away on that. I think the latest set of labour market figures, on which I'm sure there will be quite a lot of attention given under questioning. Obviously, we've had relatively weaker job gains alongside a more rapidly falling unemployment rate now to 6.6%. So clearly, with the Fed so close to its existing 6.5% threshold, one imagines that a recalibration to say 6% is not far away. But I'm sure that she will not, she would not give that ground readily. I think it's a decision that the committee will probably consider and take in the next few months. What I found interesting was it's clear, really, that that there is a transition from large-scale asset purchases to forward guidance, and I think it is a very tricky transition. In her speech, or rather in the text, she talked about both tools being effective in putting downward pressure on long-term interest rates and stimulating consumption, business investment. So she was trying to put large-scale asset purchases and forward guidance alongside each other as almost being interchangeable in being effective. Now, I think that's highly contentious, and obviously with large-scale asset purchases, there is a provision of liquidity which the market respects. It's not clear that the market respects forward guidance. And obviously we've seen in the UK how forward guidance can be undermined by events extremely quickly. So I think it's fair to say that there's a nervousness about the transition from taking away the large-scale asset purchases to merely relying on the words, and the formula of forward guidance.
And finally, what questions are you anticipating for Yellen to receive? Anything in particular that you feel could shake up the markets?
Yes, undoubtedly she will be quizzed on the emerging market turmoil. Obviously, it's not been a comprehensive turmoil, but it has been significant in some currencies. It's been significant in terms of the withdrawal of money through ETF products, both in debt and equities. And so what she has said is that the volatility in global financial markets does not pose a substantial risk to U.S. economic activity. But that doesn't mean to say it doesn't pose a threat to the U.S. equity market. And I think one key area is that the market has grown used to the concept of a Bernanke put. The Bernanke put, was exhausted or expired on the 31st of January. We don't know what the Yellen put is worth. We don't know how the health and appreciation of stock market wealth, where that figures in her thinking. She's not really a financial markets person by background, and I think there are going to be concerns that she might speak naively in a financial markets context.
Peter, thank you very much for talking to us today. That is all from me, but stay tuned to Dukascopy TV throughout the week for even more updates and exclusive interviews. Thanks for watching. Goodbye.